This is Eric Mother with mother.com, going into October 30th, 2007. The bears have been calling for a crash in October. Whatever, it ain't gonna happen, buddy. Alright, hope you guys are getting set and you're ready for a market that is gonna be racing to new highs into March of 2008. Watch your tape. Today we are going to be looking at two stocks. The first one is CMG, Chipotle. And before I go into why the stock looks good today, I want to talk about this overrated, overhyped, misleading concept of buy low, sell high. What a waste of time. It really is. I mean, let's take the example of what happened between May of 2006 and May of 2007. You see the stock was backing and filling around the $64 area and the $50 area, backing and filling for almost 1 year. I mean, this is what a waste of time to try and find the bottom here, there. What a waste of time. And the one thing that people don't realize is that whenever you buy a stock, let's say you buy a stock here, by the time this stock makes it to new highs, every time it moves up an inch, somebody who bought at higher prices earlier is gonna want to sell. They're gonna keep selling so they can get out even. So this is what they call overhead supply. So you're buying a stock low, but before you make any money, you have all this resistance. What is the point? There is a better way to invest, and let me show you. What you do is you find the stock breaking out to new highs, and the psychology of stock making new highs is not the same. When a stock is making a new high, what it's saying is, I believe I can fly. I believe I can touch the sky. See me running every night and day. Spread my wings and fly away. I believe I can soar. See me running through the open door. I believe I can fly. Oh, I believe I can fly. Oh, I believe I can fly. But anyway, the point of it is that when a stock makes a new high, there is not this overhead resistance coming from people who bought at higher prices. What you're gonna find is that, let's say if a stock closes right there, a new all-time closing high, everybody in the stock, including the very last person to buy on the last trade, is happy. So if you want my shares, you're gonna have to pay up. You have to pay up for quality. Bargain hunting is not gonna work. So how do you know that two stocks making new highs? How do you differentiate between a winning stock and one that's not gonna do you any good? Well, this is what you do. We're gonna look at two prior breakouts for Chipotle, and we're gonna see why they were similar and what winning stocks have the same. You go back to the 60s, 70s, 80s, go back. You do your research. Every time a great stock breaks out, it follows through on the weekly chart and does a number of following things on its indicators. One, when a stock breaks out to new highs, they always follow through. Breakout to new highs and a follow through. Alright, the other thing we see is that we go back and look at volume during the breakout. You see we have heavy volume on week 1 of the breakout and heavy volume on week 2 of the breakout. We have heavy volume on week 1 of the breakout and heavy volume on week 2 of the breakout. In every instance, the RSI on a weekly chart, the RSI hits 68 right on cue when a quality stock breaks out. The unbalanced volume, which is cash flow, makes a new high always when quality stocks break out. Performance again is the S&P 500. That too makes a new high every time the stock breaks out. So these are the characteristics of winning stocks. If you can narrow down your scans to stocks with that characteristics, you're gonna be okay. You don't have to worry. Forget about it. Making money is gonna be as easy as it can get. It's never easy, but you're gonna make it very possible. Now, we see that at this present time, CMG is actually broke out last week, and the former weekly closing high was at 127.50, and the stock is trying to follow through this week, still within a reasonable buy point. So watch out for support on the downside on a retest of this breakout. 127.50 thereabouts is your support area. Let's go back and look at what happened as it broke out last week. There was above average weekly volume right there, and this week should be okay. Our RSI is already above 68, a very powerful breakout. We see that our on balance volume already at a new high. Performance again is the S&P 500 also at a new high. So watch CMG for follow throughs down the road. This might also be a great options play. So look into it, do yourself some due diligence and see what you can find out. Next, Ariba. This was a former high flying stock in the late 90s. It's coming back. It's never been this strong over the last 7 years or so. I've kind of talked about it on and off, but the buy point on Ariba, again, this is ARBA, this being a 2-year weekly chart. The weekly buy point, which is a weekly closing high 1 month ago, is a 1207. The stock pierced through that resistance confidently today on Monday, and this was done on very good volume. So volume is okay. We see that our RSI is already above 68. Our on balance volume is already at a new high. Performance again is the S&P 500 already at a new high, and we also see that our MACD has already crossed over. So Ariba looking good. Add this to your stock to watch, baby. This is ERIC coming to you live and direct. Peace and blessings to you. I am out.